I think we will start. So, good afternoon, ladies and gentlemen. I'm very pleased to moderate now a panel which theme is Infrastructure, the Way Forward. And just a few words of introduction before presenting our panelists. When we look at infrastructure, around $4 trillion are spent annually in new infrastructure. And yet we all know that this is not sufficient to cover the gap between the needs. The dedicated infrastructure group of Europlus, as you know, has brainstormed on the matter, and they will produce their report shortly. And what strikes me is that there are a few themes which have been discussed already this morning. A few themes amongst the recommendations that are really recurring when discussing with all stakeholders involved in the infra scene across the board. I think that we can all agree that blending financing is the way forward on a large scale and at affordable conditions. And this requires a new approach, a cooperative approach. It does require an identified pipeline of projects, part of investment programs that can offer developers and investors the visibility to make their investment worthwhile. These programs must incorporate the new needs, the new technologies, and the cooperative approach really is key. So it also requires to review the toolbox of public contracts to gauge whether they are still pertinent. And so I think today we have a group of speakers which is quite topical to these questions and this approach, and offer a good sample of innovative teams and organizations. So I will present them in speaking order, if I may, before asking them indeed what they can bring to this party. So Jean Ben Saïd, who is Managing Director of FinInfra, an expert team within the French government that is set to develop new forms of private-public partnerships. And then we have France Arnaud de Tadeo, Chief Executive Officer of Solmondo, an insurance brokerage that she set up in France 1999?
20 years ago.
20 years ago,
exactly.
And that supports the international development of its clients. We have Thomas Innocenzi, the head of European operations of Astris Finance, an advisory firm with offices across the world that advises key stakeholders on project finance, M&A, multi-source financings with a strong focus on renewables. And finally, Carlos Terre, head of infrastructure and project finance rating at Scope Ratings, a German-based agency which ambition is to emulate the big three, if I may. So Jean, if I'm asking you what you can bring to this emerging world, new world party, what can you tell us?
Thank you very much. I'm happy to be with you this afternoon. I will say a few words about the French strategy in infrastructure financing today. You all know that the main theme of this conference is quality in infrastructure. I would say that for France today, the focus is on quality rather than quantity in terms of infrastructure creation. You all know that France has already a large stock of existing infrastructure which delivers efficient and effective public services to citizens. France is continuously ranked among the top 10 in the world for the contribution of its infrastructure to the competitiveness of the country. And so I would say that today the priority for the current government is more on quality rather than quantity. And what does this mean? it means essentially 4 priorities. First of all, build climate-resilient infrastructure in transport and energy. The second priority is to focus on maintenance and retrofitting of existing road and railway networks. The third priority is increase our capacities in renewable energy production. And the fourth is to complete the rollout of the broadband network in the whole country, including the white zones. So these are basically the 4 priorities of the infrastructure policy in France today. And these priorities are translated into 2 main bills currently discussed in the Parliament. The first is on the transportation sector, which sets priorities in line with the general goals, and which plans to invest more than 13 billion euros in the coming 5 years, which is 40% higher than this was the case in the previous 5 years, but mainly on regenerating of existing infrastructure rather than extending our stock of infrastructure. And the second example is the French 10-year plan for energy, which sets very ambitious objectives in terms of transforming the energy mix of France with much more renewables than before. From the financing and the inclusion, the partnership with the private sector, what I can say is that there will be, of course, public money invested in such programs, but we definitely need private sector involvement in these projects. It will be done through traditional call for tenders, for example, in the energy sector, but also through concessions or PPPs in the transportation sector. You all know that French market has been very active in the field of PPPs over the last 10 years, and it will still be the case in the coming years. And what we are waiting for from the private sector in the coming years is an effort of innovation and financial commitment to support our priorities, and also to create innovative solutions in on certain sectors. For example, the improvement of energy efficiency of buildings, which is a key question today for European countries, and especially in France. We are waiting for innovative solutions from the private sector to really implement new investment in this sector. Thank you.
Thank you very much, Jean. So France, I am a project financier by background, and I started over 25 years ago. It was the emergence of a form of private insurance.
Indeed.
And I know that there has been progress on that front, but I have yet to see this form of insurance take the role it could perhaps take, given the amounts at stake. So what can you tell us about this?
So indeed, credit and political risk insurance market has emerged about 30 years ago. At the time, we had about 15 insurers. It is an organized market with a few brokers animating competition among nowadays over 50 players, insurers, who are either A or AA for about 8 of them. The classical political risk cover being protection of investment against political risk, non-honoring of government obligation in concession agreements, credit risk and contract interruption on a state or contractors. This has been the same products for over 20 years. As operations on this market are confidential, this does not help really marketing the product. So capacities and tenors have really been multiplied with the number of insurers, and Paris is playing now an increasing role. We have numbers about what insurers can do theoretically on a beautiful case, which is about $3 billion on one case, with tenors from 7, 10, 15 years. Paris represents about 20% of this capacity, but we have the chance to have now a big French player, which is AXA, who bought last year one of the major players in London, XL Kathleen. So this player is now one of the very active underwriter in Paris, sitting next to 6 other global insurers. On this market, brokers play a very important role because it's a syndication market. Brokers provide with a unique policy, and they can put together 2, 3, 5, 10 insurers on one single wording. Brokers have an important added value because they are around during the negotiations, during the execution of the operation, and also after, in case of claim, obviously, brokers can help very much. Appetite and flexibility is very important for both investors on investment with long tenors, and also for contractors on contract interruption. Any sound project can be supported, whatever the country. We are speaking about quality today. The market is really looking first at the quality of the operation, of the sponsors, of the contractors, and of the managing actors. The question is for banks, because banks have been progressively using very much the market, but strongly with short-term operations. And we have recently identified with a Europlus working group that that regulation is strongly dissuading banks to use those private actors on longer tenors, which means the market has a very nice appetite on very difficult risk. They are much more flexible than any ECA or multilateral as MIGA. We can do portfolio approach, which is much more efficient than going project per project like multilaterals have to do. So for investors, it's a very wonderful project. For banks, they are only using it now for more short term. And except that, for example, in June, there was a syndication of banks for Côte d'Ivoire without any ECA for a multi-project financing that was on 8 years. This was one slightly seldom operation.
Thank you very much, France. So Thomas, I was also an advisor in my banking life, and in this new world, things are a bit different. What we can say about the energy transition is that it's complex, it is new, it's different, more decentralized systems, and so on and so forth. So what does it mean today to be innovative when advising on new infrastructure projects? How can you best make use of the energy of a France or a Jean, or we'll see a Carlos?
Yes. So as you said, Astris, we're a pure play financial advisor. Our historical focus was on emerging markets in Latin America and renewables. So we're particularly on point today. It seems that the two are very important topics today. As you mentioned, renewable energy has grown tremendously over the last 10 years, and I think this was mentioned in the previous panel. And this has been thanks to a huge reduction in cost of this energy. I'm not going to repeat what my predecessor said, but as of today, renewable energy is at grid parity, which means it's more or less equivalent in cost to other type of energies. The push from public institutions and governments to develop renewable energy is therefore much easier for these governments to implement and to enact, thanks to a limited weight on public balance sheets. And what we've seen occurring in the market is a sharp reduction in the cost of energy. Just to give you some example in terms of numbers, when we did the first PV projects in Peru almost 10 years ago, this was a project that was financeable because there were feed-in tariffs with 20 years contract at $250 per megawatt hour in terms of price of energy. Nowadays, you're able to finance projects on a pure merchant basis in Chile with spot prices in the 30s, or in Mexico, where you have project and French companies, for example, like Neoen, developing and building projects there with almost merchant projects with partial PPAs with a price in the $20. So we've seen this trend towards decreasing cost. And what has been fascinating about this industry is that the innovation has been not only on the technical side of the business, but also on the financing side of the business. I would say the financing structure had to evolve also to cope with the sharp decrease in the price that was paid to these projects. So we've seen, obviously, CapEx decrease tremendously, but we've seen financing structure change dramatically over the last 5 to 10 years. I think this fits well with the trend that we've seen on the investors and lenders side, which is that these players want to have a more sustainable impact in the way they do their lending or their investments. And renewables, it's an easy win for these investors because obviously it's a huge market and the rollout of this sector is, occurring at a great pace, and you do green investments. So actually, most institutional investors, most lenders, most asset managers have really flocked towards this sector and developed huge amounts of capital in this sector because of that. That has led to a number of institutional investors investing directly in equity and debt in projects, I think much more quickly than what happened in infrastructure. One interesting aspect of the sector is that nowadays investors and lenders tend to think that actually renewables are less risky than infrastructure and then core infrastructure in terms of project risks. Therefore, further reinforcing the attraction of the sector. And I think the evolution has also followed in the regulatory side of the industry. That's very interesting because we heard several people today speak about renewable energy, and we heard several stories. If you look at what has been done in countries where Morocco, where you have like a mostly publicly supported sector fostering competition, you can look at what's occurring in France, where you have public auctions, extremely competitive public auctions. You can look at what's happening in Spain, where you have completely merchant projects being done, or in offshore wind in the Nordics, where you see auctions, but basically zero price auctions, where the winners are going to sell their energy on the spot market. So you see across the globe a huge level of innovation also on the regulatory side. So it's yet to be seen what's going to be a winning model, if there's going to be just one winning model. But it's very trusting to be in this sector at the moment because you have to innovate, you have to bring new structures, new type of financings to make project work in terms of the economics. I think we've done, when we've done the first projects in Peru 10 years ago, we made it work because we brought a monoline insurer to actually wrap the part of the debt. Nowadays, you bring large-scale institutional investors bringing 20 years plus debt to your projects to make them work. So things are changing. We see a whole new world. It's not a disruption, it's an evolution. But clearly, these are exciting times in this sector.
Exciting indeed. Carlos, it seems to me, again, going back to the way we analyzed risk when I started, that the risk analysis today includes a set of criteria that is much more complete than it used to be. So beyond the cash flow analysis, the financial soundness, we now have to incorporate the transition risk, the risk that climate change bears on a project, regulatory risk, reputational risk, in a manner which is much more detailed than we used to. So what are the new elements of the risk analysis that you see emerge to rate a good project?
Yes. Let me first address a comment that you made when you introduced me. You said that we're trying to emulate the big three Americans. Actually, that's what we are trying not to do, because we believe we must not do what they're doing. So we're actually trying to create value by fixing the issues that they do and we do not want to do. So we have indeed sophisticated our analytics and our methodology, and we started actually from scratch. And I will not make out of this a marketing presentation of scope ratings, but I believe it was the first time that a rating agency started from scratch, focusing on the key elements of infrastructure and project finance credits, which essentially they're not corporates because they should be seen as going concerns. The economic value provides security that is effective at mitigating credit losses, and this is particularly relevant. And notice that not all rating agencies acknowledge this, which is quite shocking. And then finally, in project finance, we do have black swans, which must never be forgotten. Particularly, investors must not be fooled by the very low expected loss that this asset class has. And this is something that we take into account, because it's very easy to be misled by a systematic good performance of all the assets in a portfolio, because at one point you're going to be hit by the unexpected losses on one of the assets, and that is going to ruin that track record, and is going to make everything converge to this long-term expected loss average. So it's very important not to lose perspective that surprises do happen in project finance and infrastructure. But actually what I wanted to share with the audience today, particularly if we're talking about the future of infrastructure investments, is that we must not lose perspective that at the same time we're talking about all these trends, promoting renewables, fighting climate change, and doing all these things, we are also introducing very important risk factors. And those are systematic and systemic causes of risk. Because if we make a mistake, we will all be making the same mistake. And this is a big issue. And to the extent that the investment decisions are not really being made and driven by market forces, but are rather following some form of publicly established agenda, there is the possibility that we end up over-concentrating resources on certain areas of the economy. And this is an issue. And the market is going to signal when that is happening, because we will see that returns on particular sectors are going to be decreasing, signaling abundance of funds. The returns of certain other areas of the economy are going to be increasing, flagging that there is underinvestment. So investors have to be very careful when they decide what they invest in, making sure that it is the fundamental value of the project that justifies the investment. And remember that during times of crisis, it is that fundamental value that is going to save your position, because it is where you're going to be getting the recovery. And I know this may kind of not be the kind of message you want to hear, but as a rating agency, we believe that of course, the senior positions of projects in areas where you could argue there is already over-allocation are still safe, simply because they're senior and they're well protected, and the project value can take a haircut that is not necessarily going to damage the senior positions. There is the question of whether we are leaving certain sectors behind. And when I heard Jan speak about the agenda of the French government, he named as the fourth point digital infrastructure. As a telecommunications engineer myself, I must say that I feel that this sector is neglected in Europe. And we have also a sustainability agenda not just in terms of the environment, but in terms of our competitiveness in front of regions like China, definitely the US. So investing in digital infrastructure appears to me as a sustainable decision because it's going to make us competitive in the future. And Europe has to rethink really where we are in the global economy. What is it that we're going to be offering the world? In terms of population, we are diminishing and we are aging. So we have to find our new needs that will really make us succeed. So I would say that, you know, these are very generalistic, and I know, Virginia, you didn't want us to go generalistic, but I think that this strategic vision is necessary, and to the extent that investors also consider that, we are safe. But if we forget that there is always the risk of a herd effect, we might be making huge mistakes here.
Thank you very much, Carlos. Yeah, I did my best to get some examples, but I think no one would argue against the fact that a good project is a project that's intrinsically useful. Mm-hmm. Shall I perhaps call for questions from the room at this point? There's one over there.
Hello. My name is Marc-Henri Lebrun. I just wanted to ask a quick question because we have heard along the day about the importance to fight climate change. We've heard the importance of renewable power in this field. I think we also heard recently that nuclear power is still needed to ensure the transition to a low-carbon energy production. But I don't think we have heard a lot about energy storage today, and I wanted to ask the panel, what do they think about it? Is it an innovation that they think is important to achieve the fight against climate change? And how this could be developed and financed if time allows? Thank you.
No, thanks for the question. I mean, definitely storage, energy storage is part of, I would say, not the solution, but part of the improvements that need to be done on the energy grids generally to support renewable energy and, you know, the rollout of renewable energy. It's not something that is, you know, intrinsically new. People have been storing energy for ages. For example, you've got all the pump storage dams that are basically storing energy with water. So this is not something that's completely new. What you have with renewable energy, it brings instability to your grid because it's difficult to forecast, you know, on an hourly basis or even shorter time frame than that, you know, your production. So energy can be something that helps you to overcome, you know, the lows and peaks in demand and production. So you've seen storage being used in certain markets. If you look at the example of Australia, for example, Australia has developed certain tenders for renewable energy, for being wind farms, where they made part of the tender requirements to include storage capacity. But this is only, you know, very minimal amount of storage to actually overcome specific events on your grid. Storage is starting to develop in other markets. If you look at the US, for example, or California, the Californian utilities, PG&E, not the state, you know, privately owned utilities, they are actually now tendering projects, storage projects. And so, and on a type of model that is very similar to cold reserve. So these utilities in the US, they're tendering with private companies to actually develop, build, and operate storage capacity on their behalf. And so it's the same thing than what was mentioned, I think, by a previous panel, the fact that you still need to keep some CCGT capacities, some, you know, cold reserve to be able to cope with the lows and peaks of generation and demand from the renewable energy. So actually, you know, storage is part of the answer, but it's only, you know, a very small part of the of all the, I would say, improvements and investments that is needed in the grid to actually help sustain the renewables rollout. If you look at just Europe, I think there's been certain numbers floated around with the COP21. If you look at the COP21 objectives in terms of renewables by 2030, there's been certain estimates that say that you need to invest at least 10 billion per year on just grid. So actually, there's a lot of investment and a lot of financing that's going to be needed in this sector. Without speaking about the investment, but just a regulatory model of how you channel money and how you make the private party to finance this project is yet to be actually structured in Europe.
This is a question for Jean Ben Saïd, Arnaud de Bresson, CEO Europlace. Jean, you underlined the new focus on the quality of infrastructure, including the question of the maintenance of existing infrastructure. Can you tell us a little bit more about the way, and I know that you were a former representative of the Caisse des Dépôts, how can we manage on this type of subjects, the relationship between government, public authorities and the local authorities, which are very much concerned? This is the first question. And the second question for all of you about next session, we'll talk about G20, new priorities. How do you express the views, the comparison, the similarities of views between France and G20 next priorities, mostly in SGD objectives?
Thank you, Arnaud. Two difficult questions, in fact. The first one on maintenance. You're right. In fact, when you put the focus on maintenance, on retrofitting of existing infrastructure rather than extending new capacities, in fact, the investments are more decentralized, are more laid in the territories rather than decided necessarily by the central state. So you're perfectly right. In a certain way, for example, for the road network, a part of the investment will be decided by the local authorities and not by the central state. But at the same time, for the railway network, for example, where the investments in maintenance and renovation are the most important quantitatively, I think that the program which has been set in the current bill being discussed at the Parliament involves mainly SNCF Réseau, so the network company within the SNCF group. And for example, when the law says that we have to modernize what we call les nœuds ferroviaires, bottlenecks in certain part of the network, near Bordeaux, near Toulouse, these are essential works, essential investments which have to be implemented in the coming years and which are forecast in the current bill being discussed at the Parliament. So these big investments will be implemented in the coming years and are essential, even if we have in mind that, for example, the next step will be to build a new high-speed rail between Bordeaux and Toulouse. You cannot do that without having done before the elimination of these bottlenecks in the current networks. So, of course, there will be investment done by the local authorities, but the main investment in renovation will be done by SNCF Réseau. So that's for the first question on maintenance. On the second one, on the work done by G20, we have been involved directly in the working group focused on infrastructure within the G20. We have brought some ideas the outcome was the principle for a quality infrastructure within the G20. And we have put a focus on the off-balance sheet commitments of the governments, which have to be more transparent, not only in France, which is already the case, but of course in other countries, especially in emerging countries, on the contingent liabilities contained in the projects. So these are the two aspects of the G20 principles on which France has put a special focus. Thank you.
Thanks a lot, Jean. I have a question for you and perhaps for Thomas. France will have another go, but I think France and Carlos have already expressed things that are a hurdle in their effort. For France, it's regulation and the cost of capital. What are your key challenges to be more agile, to move faster and more, I would say, efficiently in this, in the development of those new infrastructure, or indeed the maintenance or the transformation of the existing infrastructures? Maybe whoever wants first.
I don't know, maybe.
For all of us? Or,
yeah,
or
is it for?
Yeah, it's for all of us, for all of you. I started with Jean and Thomas because they haven't yet expressed their key challenge.
I think on the regulatory side, I think that the main challenge is not on the regulatory side, is mainly on the capacity of the public sector as well as the private sector to make emerging new and innovative solutions to finance this kind of investments. Because I think it's maybe more difficult to put in place a PPP on maintenance or renovation of existing infrastructure rather than on a new toll road or a new high-speed rail. So I think that...
so you're calling on the private sector generally here, Jean, right? Banks, investors,
yes,
contractors, okay.
So I think that the question of how to finance through PPPs a program of maintenance and renovation of existing infrastructure is a key question today for us.
May I jump in?
Sure, please jump in.
Simply because I believe I can actually connect what I want to say. Indeed, letting market forces drive the future, I think, is very important, precisely to avoid this kind of systemic risk I was referring to. But then when we analyze the challenge, for example, of maintenance under PPP and concession approaches, what we have to acknowledge is that what we're lacking here is the incentive that an owner would typically have. When you have real owners and not simply concession operators, owners will take care of the asset because that's their cow. They're milking the cow, so they will want to make sure that the asset is in good shape for a very long time. So the challenge for PPP frameworks is actually to create a framework that will incorporate the same type of incentives that a private owner would have if he owned the asset. Now, if you want to be extreme, you could call for the privatization of everything, and that would be a solution. But if you want to keep this kind of framework we must perfect our PPP frameworks so that we create the same incentives that a rightful owner would have to take care of the asset.
So what you're saying is that the penalty regime is not enough?
Well, I mean, you can accomplish things with penalties, but you can also accomplish things with incentives, like positive rewards. I must say that it's got to be innovation, like John was saying. Now, obviously, we know that the best source of innovation is always the market, because entrepreneurs are constantly scanning for opportunities. But I cannot predict what the future is going to be. There is the need, clearly.
Indeed, the market is still a niche activity, and I think it's sort of general interest to promote the existence of this private ecosystem. And bank regulation should really treat more softly the difference between sovereign signature and private signature at an equal rating. So it's a sort of general interest, really.
And I think on our side, in terms of the rollout of the renewable energy generation, I think it's, I'm not saying this in a wrong sense, but somehow the public support and public regulation are the main bottleneck right now in the development of this industry, in the sense that public support was instrumental in developing this industry, but I think now we are at a point in the development and in the growth of the industry where actually public as a whole, the public demand and public support for more green energy is huge in the public area. Money is available. There's so much money, so much investors, so much lenders with money available for these projects. And what's really, a bottleneck in the development of an industry is getting the projects. So getting permits that are not, subject to, very difficult to manage legal challenges. So, for example, that's one of the cases in France where we have, a very nice framework for the development of renewable energy, very stable and sound system. But actually, it's difficult to actually get projects and to submit them to the auctions just because, getting all the permitting done is complicated. And so that's, where it's one of the rare sectors where actually, the public entities, the governments are playing catch up with the sector.
I think there's one question here.
I'd like to make a contribution here. I think the core problem is you've got major sources of finance with no social mores, whatever. They'll lend huge sums of money to organizations that should know better than to take it in the first place. And then it inevitably leads in the long term to the destruction of the organization. And we've seen repeated examples of this worldwide over the last few years. My view is that we should start with a core moray, a concept that everyone taking investment should, as an aiming point, deliver a minimum 8% dividend on the equity invested right from the outset, so that as they grow, they know they have a responsibility to the entire financial system, including the little people, all around them as they grow. And then, with that in mind, they'll start to refuse to take vast sums of debt that will damage that responsibility. So I honestly believe that your core problem is you have not established an attitude of mind right at the base of the economy that we have a responsibility to actually provide the income for the pensions, for the savings, for the stability of the system. And it's that lack of stability that's your core problem. Thank you.
Thank you very much. Any comments to?
There's nothing less sustainable than the accumulation of debt. So obviously, if that was a call for less leverage, I can only agree with that.
Yes, so can I. One of the new features of this developing infrastructure market, which I observe very strongly, is the expectation and the involvement from the citizens. So going back to the point which seems obvious, that the good project is a project that needs to be useful. The good project is also the project that needs to embark all parties. It's a job, and we see an increasing, again, when speaking to all the stakeholders, we see an increasing demand from citizens for more local thinking projects, for citizens to take ownership of the design of their city of the future, which often is about working with the existing infrastructure. And this notion of responsibility, accountability is much stronger today than it was 20 years ago. And I agree with you. I think it's a fundamental element So that's also, it seems to me, a feature of this new development of infrastructures. I hope it further develops.
I think we're yes. Okay. I think that's now we go to the next roundtable. Thank you very much.
Thanks a lot.
Thank you.